Well, hello everyone. Welcome to Getting Started with Technical Analysis. My name is Barbara Armstrong. I'm a coach with Schwab. And today we are going to talk about price patterns. Specifically, we're going to talk about panic patterns or wedge type patterns, and talk about how we can, one, recognize this type of pattern when we see it, and then talk about how a trader might look at that and begin to trade it. So here's my first question for you. I like these to be interactive. Are you familiar with technical analysis, or are you brand new to all of this stuff and not sure? Because this is an introductory class. I see a lot of who I affectionately call the usual suspects here tuning in, and it's always great to have you on board. And you know, I continue to learn from you. Hopefully you continue to learn from me. I just learned in the chat prior to the class starting that Square, ticker symbol SQ, has changed to XYZ. So I've made a note of that, and I'll be following that. But we've got Ben Watson with us in the chat today. He's a friend and a fellow coach. He understands our topic today inside and out. So if you've got questions, don't hesitate to ask. And hello to all the brand new people, but also, you know, the people that I like to call the usual suspects: Paul and David and Jeremy and Lisa and Will and Life in the Fast Lane and Ken and the rest of the gang. It's great to have you all here. And Ricebird. Now, do you guys live in Houston, Will and Ricebird, or did you just travel there to attend that in-person event a couple of years ago? Lenara is saying 2 years in and still confused. You know, I discovered technical analysis. It was really charting that blew my mind back in July of 2011 when I discovered the world of investing and trading. And there are days that I am still confused. So, you know, if you are confused, know that you are not alone. You are in good company. Okay. Okay. So let's get right down to business. If you are not following me on X, I invite you to follow Ben and I. Ben's handle, Ben Watson CS. My handle, Barb Armstrong CS. We're posting lots of great content on a daily basis, and you will want to make sure you follow us there. And know that we're going to look at lots of examples today. We're going to look at lots of charts, but know that everything that we look at and discuss is for education and information purposes only. None of it's to be construed as a recommendation on the part of Schwab or myself. We will talk about options as part of today's class. If you're new to options, don't think, ooh, this isn't for me, and go away. We're going to look at stock example trades as well, but know that options carry a high level of risk. We'll discuss what that means and aren't, you know, suitable for all investors. We use the Paper Money software application on the Thinkorswim desktop platform. It is a brilliant place to learn, to make sure that you understand a trading strategy before you trade it, that you practice. It's a great place to practice, become familiar with the platform, etc. There are some nuances and differences, and we'll discuss those, you know, as appropriate. And while this class, I mean, it's called Getting Started with Technical Analysis, so our focus is absolutely on technical analysis, but you're going to want to weave in other approaches, including fundamental analysis, an overall view on what's going on in the market in general, before you place a trade. But for some, this is an important component. And for me, once I discovered this, I wouldn't, my thing is technical analysis is something that I lead with as an investor. So it's an important part of my analysis process. So somebody is saying, you know, if you're new, you know, can I look at technical analysis with no formal training? I have no formal training, you know, and I'm a coach. I started as a client, my friends, and I started by doing the course, and there is a course that's available through Schwab that you can do. And then I went through the equivalent of the Getting Started with Technical Analysis series, or what was available then back in 2011. And then I started placing practice trades, and I started watching webcasts like this. And, you know, and now I'm on the other side of the camera. So there are lots of ways to learn, and formal education is but one part of it. But you can learn an awful lot by coming out and hanging with us for, 45 minutes every week, and then attending some of the other webcasts as well. Okay, so yeah. Anyway, let's kind of move things along. So we're going to look at what price patterns are, and we're going to do that as kind of a general overview. And then today we're going to pick one price pattern. Okay, we're going to pick one price pattern at a time, and and there's lots of them, and then we're going to go and look at examples. We're going to look for examples on the charts, and then we're going to say, okay, given that we have an example, and we have a breakout or an indication that this might be an opportunity to place a trade, then here we'll go. Okay, we'll do some example trades. So what is a price pattern? So price patterns are created, from support and resistance lines. And I think of support as being the floor and resistance as being a ceiling. And so we can create all kinds of different shapes. So let me get my drawing tool. As many of you, you regulars know, I'm a bit of a Heinz 57 as far as background, but the French Canadian is part of it, and we like to chalk with our hands. So you can have something that is uptrending. Let me just get this going here. Uptrending, and then it might come up and start to go sideways. And we call this, when it comes down and hits a certain point and bounces up again, we call that support or the floor. I think of it as the floor. And when it comes up and hits this top part, I think of that as the ceiling or resistance. And when something breaks through, one of the things that you'll find as we look more at technical analysis is if this comes up, say it pulls back a little and then it breaks through, often old resistance can become a new floor or new support. But we can end up with price patterns in all kinds of shapes. And today we're going to look at, you can call it a triangle, you can call it a wedge, you can call it a pennant. This is not a flag. A flag is a different pattern. And there were a lot of flags flying at half-mast on Sunday in the Metro Detroit area. I think if anybody saw that Detroit Lions game, it was a sad way to end the season. But each different type of pattern has a unique construction, and it can be formed over any number of time frames. And when you're seeing a pattern like this, we're looking for a specific signal. Okay. So, and what's the time frame? Oh, it could be short, it could be intermediate, it could be long term. So if you're a day trader, you may be wanting to look at a 1 day, 1 minute chart. Now, we're not talking day trading in this class. Our focus typically is on intermediate or longer term, in which case we might be looking at a 6-month chart or a 1-year chart, or if you're a longer term investor, you may want to look at a 5-year chart. And these patterns can happen, we can see these over any number of time frames. Okay. Now, what signal are we looking for? Well, with a pennant pattern, if we have a stock that has been, let's say it's been uptrending, so it's been kind of climbing the hill, and then it gets here, and then it starts to pull back. And so we have a low, we have a higher low, we had a high and a higher high, so that's an uptrend, right? Well, then it starts to consolidate and it comes up here, and what do we have here? So here's a high, and this is a lower high. And then it comes down. So is the uptrend over? Well, we don't know. Because this is still a higher low. So here was our low. We have a higher low and another higher low. But in the meantime, when it bounces, if it comes up here, This could be another lower high. So what are we looking for? We're looking for it to break out one way or the other. And if it breaks out to the upside, then we have what? We have a trend continuation pattern. Okay. Now, could it go the other way? Well, yes, it could. So it could come down here and then break out. And then this, remember, ceiling, old ceiling can become new floor, old resistance can become new support. And in the same way, this here is acting as our resistance level, right? And this is acting as, sorry, don't let anybody teach. Our old support level, this is our resistance level. If it breaks below and continues down, could this support become a new ceiling or resistance? It could. And so we're looking for this to break out one way or the other. And, and that is our signal. Okay. And then with that signal can come a target. And what might that target be based on? Well, with this type of pennant pattern, you might say, well, hey, I'm going to measure this distance. And if it breaks to the downside, let's say this is 10 points, then my target would be 10 points from where it broke out. Okay. And if it breaks to the upside, then the target would be $10 to the upside. Are there any questions about this one? About this? Okay. Okay. So let's shake my Etch-a-Sketch. And now I'd like to go out to the charts. I think I may have one more here. So you can call this, and we're not going to worry about names. We can get more into, the details on this. But this triangle or pennant pattern, it can be either bullish or bearish. And we just talked about that. It just depends. This is a bullish example because we have what? We have a breakout to the upside. And you would also call this a trend continuation pattern, right? Why is that? Because it was uptrending and then it came in and started to consolidate where we still had a low and a higher low, but we had a high and then a lower high. So we had this kind of coiling and we're waiting for it to kind of break out either up or down. And in this case, it broke out. Okay. And typically, if we're looking at an intermediate term time frame, these usually will take at least a month to form. Now, if you're looking at a 1 day, 1 minute chart, maybe that's an hour to form. And we're looking, when we have a strong trend, the expectation might be that this would be a trend continuation, but there's never any guarantee. And so our entry is when it breaks either to the up or down side. And our target is based on the width of this triangle or pennant. Okay. Okay. So now we're going to go out to the charts. So let's start with Meta. So this is a 1 year chart on Meta. And we can see, what generally has been our trend here. Well, this has gone from $380 a share up to $638. And it hit this high of 638. And then what's been happening since? Just pull this down a little. Actually, let's just come to a 6-month chart. What's been happening since? And I find drawing lines really helpful. So if I come here and you can start with either the top of the candle or the wick. So we had a high and then we had a lower high, didn't we? What about at the bottom? Well, so here we had a low. Whoops. So here we had a low, and then this is a higher low. And here's another higher low and another higher low. And so you might say, well, it's just continuing to uptrend, but we had this high and then we've had a lower high. Now, has it broken out yet? No. So we have negatory on the breakout. So what do? We take one hand and then we take the other hand and we wedge them firmly under our butt and we do nothing because it hasn't given us a signal yet. And if this is the signal we're looking for with this pattern, we don't have it. And, you know, patience is a bit of a virtue. It's not my strongest character trait. You know, sometimes I can be a little impatient, but, you know, if you have a set of rules and you're following them, would we have an entry? Yeah, Will says, we wait. We wait. Yes. So we are waiting. And this is, yeah, somebody is asking the question, is this called consolidation? Yes, it is a consolidating pattern. You have got that 100% right. Yeah. So the same someone is saying, like, couldn't we trade this when it's going sideways? Right, but it's consolidating. It's not really going sideways, is it? And we're expecting a breakout one way or the other. So if we did a trade that would take advantage of something moving sideways and then it breaks out, you know, what are we? We're in a losing trade. And so if we're looking for something that's moving sideways, we want to look for something that's continuing to move kind of come saw, right? And is this doing that? No, it's consolidating. And so we're going to treat that differently. Okay. But I really like the question and I like the way you're thinking, you know, because if we don't like try and think this through and then ask the questions, then we're not going to figure it out. Okay. So let's look at Walmart. Oops. Just that. Okay, here we are. Walmart. Okay, so Walmart, has this been uptrending? Well, yeah, this is just a 6-month chart and it's gone from 66 to 96. So that's like a 50% gain. So that's definitely not too shabby, right? Right. But if we look at this, is this another one where, and this was up a lot more dramatically a little earlier, and now it's kind of come down and it's kind of kissing, you know, if we kind of, and I just started this in the middle of nowhere, you might, so let me just start this line again, because we might want to start it here. Now others, and this is where technical analysis is an art. You might say, well, I'm going to come back to here. You can do it however you like, you know, and this is the art of technical analysis. And I think, you know, in a lot of science, there is art as well. So earlier today, when this was trading up near the high of the day, you know, and the high of today was around $94, would we have had an entry? Yes. But now it's sitting right on this diagonal resistance line, isn't it? And so is this really a breakout? Could it be a fake out? You know, I had a trade all ready to go on this one, you know, but again, take right hand, take left hand, sit on them. So you might say, well, yeah, we're seeing a little indecision here. And so maybe we want to wait. And you could say, well, you know, and we could talk about this again tomorrow, because tomorrow we're talking trading price patterns. And so that's exactly what we're talking about today, only today is from a more introductory level. So I'm going to put an asterisk beside that, and we'll come back and revisit that if you want to join us tomorrow. in trading price patterns. But we're going to just, again, exercise some patience. Now, had we looked at this 2 hours ago, we might have placed a trade and it may, have worked out just fine. And we're not hesitating because we're not sure. We're hesitating or we're deciding not to place the trade right now because we don't have a clear signal. Okay? And there's a difference. There is a difference. Okay. So let's look at American Express. Well, actually, we'll go to American Express next. Let's look at Amazon. So what are we seeing with Amazon? Do you see what I see? So I see this downward trending piece. Now, and again, this is where the art of technical analysis is. Some might say, well, I don't see as much a wedge here. What I see is this kind of downtrending range. So I'm going to duplicate this drawing and pull it down and say it's broken out of this kind of downward trending range. Now, others would say, okay, you may have drawn it that way, but my friend, this is how I see this pattern. And so I'm going to get rid of your drawing and I'm going to say, okay, here's where we are. And, again, if I wanted to put a target on this, there's a couple of different targets we could have. It's trading at 230. A swing target would be the previous high. That would be 233. We do have earnings coming up. That's on February 6th. Now, could we do an option trade on this? We could. Could we just buy the stock and say we just want to buy it and hold it? Or could we say, I'd like to do a shorter term trade. I'm going to measure this. Say, okay, this was about a range of about $27. So I'm going to take this, I'm going to duplicate this, and I'm going to bring it over here to, whoops. I'm going to activate that because we're going to bring it down to the support level. I'll put it right beside so it's not so distracting. Say, okay, here's my line. So now where's my target? It's at the top of that line. So my target's around $252. And so if I wanted, I've got earnings coming up. If I wanted to buy 100 shares of the stock, where might I put a stop? Well, one person might say, well, my expectation, if I'm willing to buy the stock, is that it has broken out of this wedge pattern, right? Or this pennant pattern. It's broken out, and my expectation is that this old resistance has become new support. Okay, so I'm going to say, I think we've got support here around this, this 30-day moving average just happens to be there, 224.53. So I am going to take this 224.53 and multiply that by 0.97. Say, we're going to give it some wiggle room. So if it goes below 217.79, I'd like to exit the position. Now, others might say, you know what, rather than doing that, I'd rather, buy a protective put. You could do it any number of ways, but our focus here is, 217. So our stop is actually kind of below this support level in this pattern as well, the original support level. So 217.79, if we wanted to leave our stop in there on the chart, and that's our stop. And then this top line is going to be our target. So we could put that in there. And we could make it, say, knock $1 off it, 251. We'll make it 251.52. Now, how do I put this in? If I want this to show up on the chart, I'm going to change this show name to on the right. Okay, so there's our target, there's our stop. So we're going to come in 252.51. That's our target. So we are going to come in here, right click, and we are going to buy 100 shares of stock. And we are going to do that with an OCO bracket because we want to put in a target based on our technical analysis. And then we want to put in a stop. So our target is going to be 252.51. And our exit is going to be, was it 250? Our target 217.79. 217.79. Okay. And that was supposed to be 250. Yeah. So $217.79. So how much are we risking? Well, if we got stopped out at exactly the price we're requesting, you know, we're risking about $13 a share or $1,300. This is a $500,000 account. So that's within our range of acceptability. Our position size is about $23,000, which is about, you know, it's less than 5% of the account size. So, you know, 10% would be 50,000. So 5% would be 25,000. So we're good there. And how much could we make? Well, we could make up to $22 a share. And so it's you know, we've got more upside than downside. Now, just because we put in a target and a stop, does it mean that we have to wait until we're either stopped out or it hits our target? We do not. You know, if we got up to 250 and then we get a candle pattern configuration that indicates that it looks like the stock may be starting to pull back, could we decide to get out with a $20 gain instead of a $22 gain? You bet your sweet bippy we could. And we'll talk about that in upcoming classes. So we're going to put this in our stock with a target group. And our target is based on the width of the pennant pattern. Okay. Are there any questions on that? Where did I get the 210 level? The 210 is the so 230 is the current price of the stock. Here's our 217. I don't know what you're referring to with 210. So the current price of the stock is 230. And so we're looking at, oh, you're asking a question of Carol. Okay. Oh yeah, the bottom of the channel. Yeah, and others might say, you know, you see the bottom of the channel down here. And so you'd like to measure this distance from 210 to 233, you know, that $22 difference. Yeah, and again, you know, technical analysis is in the eye of the beholder. And so this is kind of a more conservative approach because we've just drawn it straight down as opposed to drawing it all the way down here and measuring it like this. And we could do it that way also. And then you'd have a higher target. And I say this is more conservative in that the probability of it coming up and hitting 250, you know, some might view as higher. Okay. And if you come out to the trade tab and you look out here to March, you know, and say, okay, what's the probability of it coming up and at least kissing this 250 mark? It's about 50%. You know, we don't even have this on the chart. So, you know, it's still a pretty aggressive target. Anyway, let's move on. So that one was Amazon. How about we look at Starbucks? Okay, so let's come and look at Starbucks. Are you guys finding this stuff helpful? Okay, so how do you gauge how long it will take Amazon to make its move? And that's a good question. Let's just come back here for a sec. So how long did this pattern take to set up? Well, it started in November, December, January. Today's the 21st. So it took almost 2 months for this pattern to set up. So, you know, it could take several weeks. Now, the last time this thing moved dramatically to the upside, if you take your drawing tool, and there's no saying that this will happen again this time or that it will ever happen again, it moved up 17% or $34 in 16 trading days. And, you know, we have earnings coming up on February 6th. And so, you know, we might, you know, want to exit this prior to earnings if it's gone up a bit, because it could gap up or down. And you may also want to come and look at the news. And so we see here that Needham still calls Amazon a buy, has a 250 price target. Deutsche Bank raised their price target to 275 from 232. Roth raised their price target 250 to 260. BNB raised their price target from 180 to 220. Now we're seeing a range of different price targets here from 220 to 275 and a bunch of things in between. What we aren't seeing is anyone lowering the price target. So, you know, when we look at this, it's like, okay, well, a lot of people are raising their price targets on this stock, not lowering them. And so that kind of, you know, might lend a little credence to placing your bullish trade. Okay. Now, could we do an option trade? Well, we could, but with some, because it could gap up or down. If it gaps down, we have a little bit of bandwidth before it hits our stop. With an option, you know, we could lose 100% of what we've invested. And because we have earnings coming up on the 6th, we're going to choose not to do an earnings trade on that one. Okay, so I said Starbucks. Let's have a peek at Starbucks. Okay, so let's just start over without, you know, my original lines on it. So again, this is one where if we're playing I Spy and it's what do you see? Yeah, no, Carol, absolutely no German. It's actually Swedish. My background is my dad's parents were Swedish and my mom's parents were French Canadian. And then there's some English thrown in there from the Thanes of Cawdor. You know, so, okay, so some might look at this and see this as this pennant type pattern setting up. And it's a little different in that this had a pretty dramatic pullback. When we go back to our American Express. Oh, I guess we haven't really looked at American Express. You know, this kind of consolidated and moved up. You know, and we can talk about this as another wedge pattern example. But, you know, when we look at Starbucks, this one kind of came down, didn't it? And so this can make people a little more nervous when we're looking at this context, because this kind of had a bit of a Humpty Dumpty move. And then, you know, it was really interesting because when I was a client, I would often see certain things on the chart, and then I'd talk to someone else and they saw totally different things. And so one of the things that might have been pointed out to me would be that, well, this gap to the upside pretty dramatically. it wasn't a direct reaction to earnings, but I think this may have been when the new CEO came in. So it gapped to the upside and then consolidated for quite some time, didn't it? And then we had this panic pattern form. It came down to the support level and then broke below it. And it started climbing its way back out. But one of the things some traders might have looked for would be for it to come back above this potential ceiling, old floor, old support becoming new resistance, and it has done that. And then it's also broken out above this. But what have we got happening? Yeah, earnings on the 28th. So that's next Tuesday. Okay. So we see the pattern, we see the breakout. How many days of a breakout is this? 1. So it could be a breakout, could be a fake out. And we have earnings coming up. So just because we see a pattern and we have a breakout, it doesn't mean necessarily that we're choosing to trade it today, but we might say that, hey, we're going to keep our eye on this one. Or you might say, well, I wonder what the analysts are saying. I wonder if that's what prompted this stock to move up. What caused this stock to move up? And so, if we're coming down and looking at things, okay, so these guys, same, DB, lowered their price target, kept a buy rating, but went from 120 to 118. Now, Barclays went to 119 from 108. So the jury seems to be conflicted. And so there's, and this was back on January 7th. And when we come up, I'm not seeing anything new from the analysts. They may just be waiting, for earnings to come out. And so in spite of seeing this, we might choose to wait. Okay. Okay. Oh, that was Amazon we looked at. Let's look at American Express. So we've got Amazon. So today appears to be sponsored by the letter A. Now, what sector is American Express in? If you're not familiar, and I think most of us are familiar with American Express, but if you aren't, you can come to the Analyze tab and Fundamentals and see that it's part of the financial sector. So then we come and we might say to ourselves, hey, self, has the financial sector been strong? And if we come and we just click on this, and I've linked my watch list to the chart, we can see that this has had a bit of a pullback and has, had a diagonal resistance breakout, this whole sector of the S&P 500. So this sector has been strong. And then when we come to American Express, it's helping contribute to this sector's success, isn't it? Although it's been, and let's go for our, so again, high, lower high, lower high. And then if we come down here, we've got a low, a low, a higher low, a higher low, a higher low. And then when did it break out? Last week. And again, we might have said, hey, this is a 1 day. Let's see if there's confirmation. You had a 1 day pullback and, it's hitting a new high today. And again, we're just ahead of earnings. But you might say like, hey, there have been a lot of stocks that have done well on earnings. JP Morgan, not exactly the same company, but it did really well. Goldman Sachs has done very well. Visa has yet to report. It has earnings coming up, but it's doing well, like someone else in that credit card space. MasterCard seems to be rebounding as well. Again, earnings coming up on all three of these. And so what if you said, I'm not sure I want to buy the stock, but I have a feeling that it might go up. And maybe you don't have an account where you could invest $25,000 in a stock, or whatever that might be. Could you do a shorter term trade? Well, you could say, well, I think this may still go up, and you could do something like something we call a long call vertical, where you may say, I am going to buy, let me just get my drawing tool. I'm going to buy a call at 315, and then I'm going to sell the 320. And the idea is for the stock to go through both strikes and then stay there. And if it does that, then I have a successful trade. And how much could I lose? The entire amount I paid to get in. But if, we're drawing our line, how high are we expecting it to go? We are expecting it to go higher. That doesn't mean that it might not pull back before it gets there, or it's not a guarantee. No pattern works 100% of the time. So if we duplicate that, now if you're not familiar with that trading strategy, so this might be our target on this, up here around 334, but kind of a conservative way, if we come out here and and some, my example trading plan would not allow us to trade this over earnings, but we're not going to place the trade. I'm just going to give you an idea. If we came out to February and we said, okay, we're going to buy this 315 and we're going to sell the 320. Now, why does this 315 have 0? Because these just became available to trade today. And so we can see that we've only had one contract traded. That would be breaking another one of our rules. Because until today, we could only trade the 310 and the 320. But let's just say we were cool with all of that. So, and we're going to make this 320. We'd be risking $268. How much could we make? $232. How much could we lose? $268. But that's a way of approaching this in a risk-defined way, to approach a stock that is moving bullishly that you may or may not want to own. Now, again, in our trading a smaller account class, we wouldn't be allowed to place that trade because things can gap over earnings. Okay, so yes, company starting with the letter A. Okay, so, and we may revisit this one again. We'll see what tomorrow brings. But that's our class for today. Looking at these pennant or wedge consolidation patterns and looking for breakout opportunities that might indicate either a bullish or a bearish entry. So we did place one example trade that was on Amazon. We agreed to sit on our hands with respect to Meta and Walmart and Starbucks. Yeah. So guys, if you have questions and you're watching this in the archives, you can type those in down below. As we wrap up, I want to thank you all for being here. I want to thank Ben for being so great in the chat. I encourage you, if you do me a favor and hit the like button. What that does is it moves this up in the algorithm so that more people can find this content. And so if you would do me a favor and do that, that would be great. It also lets Ben and I know that you found this content helpful. Subscribe to the channel if you're new to this and you haven't already subscribed to Trader Talks from Schwab Coaching. You'll want to do that. Yeah, and last but not least, don't forget to follow us in the Land of X, Ben Watson CS, Barb Armstrong CS, and have yourselves a really awesome rest of your day. There's more webcasts coming up. I hope you'll stay tuned for those. And if you want to join me for trading price patterns tomorrow, would love to see you there. Take care, everyone. Thanks to the guys behind the scenes for all that they do. And we'll see you tomorrow. Bye for now.